A new era is upon us. Pulse has taken the world by storm as the leading Web3 social media. Beyond current features like casting, tipping, inscription trading, and earning, it's now elevating to the next level, on-chain.
Soil, a fully regulated, seamless link between traditional finance and the digital crypto world, offering secure returns fully backed by tangible, real-world assets.
The Credify testnet is live, so head on over to demo.credify.finance to see how you can effortlessly experiment with autonomous earning, NFT corporate bonds, Credi and X-Credi utilities, and Module X.
Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone 1 minute past midday here, making it 1 minute past 1100 UTC. A very big shout out to everybody watching this live today and everybody that's also going to be watching this on catch up. So, where are we? Well, we're going to take a look. I've got the Bitcoin 4-hour chart up here. We are going to have our focus around Bitcoin today. Probably will take a look at ETH, maybe a couple of others as well, but do want to kind of take a look also over at the equity markets as well. We've obviously got a very news-driven market as it is at the moment. ETH as well, straight on there as well. Yeah, no problem, Simon. I'm sure we'll take a look at that, my friend. Now, I'm just going to kind of dive straight into it today, guys. If you've got any questions, bits and pieces, do let me know. Now, I released the Bitcoin report last night. Really, quite simply for me, we'll take a look at this daily one in a second. But look, big expansion here, lots of displacement above these equal highs. What did it do? It left us this gap here. I'm just going to get rid of this one for a minute just to clear it up. And let's just pop the daily one off for a second. So quite simply, the line in the sand was this fair value gap here. Now we can see how price drove into that, completely rebalanced it before finding that bullish momentum higher. Now, whether this was the news catalysts that were firing over the weekend, for which there have been a lot, Biden stepping down, obviously we came off the back of the wake of the attempted Trump assassination too. So there were a lot of kind of factors to kind of play into this as well. Also the fact and the underlying fact of which that economic conditions are improving, inflation is becoming more stable, interest rates are higher in the price, that there's going to be at least one, maybe multiple cuts this year with a focus on the US market. They typically will generate prosperous market conditions, as will a Trump re-election. If we look historically what that has done to price action, I'm not going to get into the politics behind that, whether you love the guy, hate him, etc. On this show, we don't really care about that. Like, that's all to do with people's personal preference. What we care about is how this affects the market and what it does in terms of putting us in a trading position. Now, this is a hugely bullish candle, right? So what have we done here? We've dropped into an area of repricing. Yeah, so the way that I look at these gaps, and good morning quickly, 2PGG, great to see you back on the show as well. Craigie boy, Nit, obviously, Erica, Taha Khan, hello, mate. So look, I look at these as kind of areas of repricing, if you like. So when we're bullish and we're holding a bullish structure, you know, we never want to forget about market structure, displacement, etc., right? But look, when you're making higher highs and higher lows, the market is in a state of bullish delivery. So what we're looking for here, and we can see the higher highs, higher lows. Look, quite simply, if you're in a bullish state of delivery, you are looking for bullish price action until the market shows you weakness. Now, one of the things that a lot of people will be taught in their trading careers, or one of the things that you will get taught when you start to trade, the areas of support and resistance. And this isn't the greatest example in the world, but just to give you one that's on the chart, if this was resistance here, this was resistance here, strong close above it, this is confirmed as support, you know, and this is what we get as a long. Now, the issue that you have with here is you're leaving kind of very visible liquidity targets, right? So if you're saying, okay, well, if I'm going long here, just for example, you're waiting for that move on a lower time frame, you're putting your stop loss under here and you're targeting higher prices, then, you know, it's very, very easy to understand where the liquidity is resting, because it's below old lows, above old highs, but it's also within gaps, all right? So what is that? And especially, and you'll hear me bang on about this a lot, when you see lows or highs that exist within gaps, because they provide kind of a double liquidity pool. So when we look at a gap, we're looking at this to see what price is going to do. So when we're in a bullish gap like this, then quite simply on the lower time frames, I am looking in here for a pattern like this, a fractal pattern that we see a lot, which is where you see a sweep of liquidity, displacement higher. So liquidity is induced from the lows, right? Why is that important? Well, it's the generation of liquidity. You get a sweep, send the market one direction, right? What do you do here is, well, you take out anybody below this low. That creates a load of market sell orders, right? So you create a lot of liquidity down here. And then people start to induce. You start to get breakout traders going short. You start to get algorithmic systems triggering to go short, etc. And actually what then happens is this liquidity pool that's built up here, because these stop losses turn into market sell orders, then you can see major players stepping in to take all that pre-made liquidity, use it to fill their bids, and then the market goes the other way, trapping a lot of people and then chasing liquidity higher up, right? So that's the kind of patterns that I'm looking for in here. And if we move down, we'll probably see it a little bit clearer here on a 5-minute chart, right? Quite simply, you can see a very clear and obvious move below these lows, inducing the liquidity, right? Price comes down. Then what do we get? You're looking for the high that takes the low. If you then create a secondary internal high here, you then want to see that broken with displacement. Just zoom in here for you for a second. Right, what are we looking for in displacement? You're looking for a high energy move. You can see it here with a big expansion. Look at these 3 big bullish candles. And then you're either looking to be a buyer in here, right? Or you can look for price to retrace, whether you're buying on this line, you know where you're wrong under the swing low, you've got your higher targets, okay? Or you're looking for a retrace into one of these gaps, yeah? There's multiple different ways that you can be a buyer in this market or a seller. It's the technical levels that we're aligning ourselves with that allow us to kind of test that theory. So now you're saying, okay, what happens if that fails? What happens if you enter your long position, but you're wrong and you get stopped out? Absolutely fine. That's the nature of trading, right? We can't be afraid to be wrong. But what we do know is that if this, for example, had happened, and rather than get that big expansion, rather than see that support hold in here and price expand high, if we close below this here, then we can see weakness in this. This is an area that the buyers should be stepping in, right? If there's strength, if there's commitment, if there's conviction from buyers, this is a great place for them to step in, because basically the buying pressure here was so strong. This is where you leave these inefficiencies. The market likes to be efficient, so it typically dips into these areas after it's taken liquidity to reprice, and it's kind of looking at it almost like a fueling depot, right? Or a resource depot. And what you're saying is price has kind of made this really long journey here, and it's basically run out of fuel. The gaps provide the fueling station. If you can find enough fuel here to take you to your next destination, yeah, then that's where you're going to go. If there's not enough fuel here, then quite simply you need to go back further and find where there's enough resource for you to continue your journey. So that's what we're looking for. Now, let's just get rid of these for a second and start with a clear chart, all right? Because we want to go on to our weekly time frame as well. It's very, very important that we have context for the higher time frame, because look, we had the same situation here. Nice expansion higher, price found support at this gap. Price then left a lot of liquidity under this low, which still resides within the gap. Price then had expansion, right? Now, you might be sitting there, the eagle-eyed amongst you, and say, yeah, okay, BC, but you're saying that things need to take liquidity really before they then make their secondary move. And that's right. So a lot of people, myself included, were looking at these highs up here, yeah? This high, also this high up here, right, as liquidity targets. However, what price did is price created its internal liquidity target. Get rid of that for a second. By creating this high, price corrected down. It then took this. Look at the way that the candle engages with this high. Look at what happens here. Does it displace over it? Does price close above it, right? Is there that momentum? There's not. You can see the weakness in there. This is actually like a bearish kind of inverse hammer, or, you know, a pin bar candle, long upside wick and a solid body at the bottom. Think of it like a weight, yeah, like a fishing weight or any kind of weight, like a, you know, like you would see people throw the hammer. You can see the weight is down there. So that's typically where you're then saying, okay, where's the market heading? Very good friend of mine, an exceptional trader who trades with me over at the bird nest Bast, actually plays this pattern a lot and looks for confirmation here, saying, okay, look, bearish hammer candle here, followed by an engulfing candle. That's what gives you that conviction to trade this down to the lows. So then when that happens, you're looking for two things. Remember, we're looking for our liquidity below old lows and above old highs and within gaps. So when we got into this weekly gap here, as I was very vocal about, it's like, I'm not going to short Bitcoin here. Yeah, there's no chance. Right. First of all, we're quite low in this move. We've come down and taken this key liquidity pool here. The chances for me and what I'm looking at on a weekly scale is saying, okay, well, the expectation is that we're going to correct to here. I'll do this in red just to signal that it's a bearish gap, right? So what does that mean? Well, if we're delivering bearish here, what have we done? We've taken liquidity from the highs. We've now taken liquidity below this low. So if we're now looking for internal liquidity in the gap, we're looking here to make our decision on what price is going to do. And while we're in here, my expectation is for price to move lower, unless we close above this, which we've done on a weekly scale, and we then invert it, right? Now, inversion gaps are very, very important on any time frame. What is an inversion gap? So it's looking at a bearish gap or a bullish gap that's closed through. Then the expectation is for price to move the other way. So bearish gap here, right? Price comes in, what do we do? Well, you might say, yeah, but hang on, there's a bullish gap here that was violated as well, right? Absolutely right. So that was a bullish gap. So when price took out this high, we expect price to reprice here and move higher. It didn't. When it closed below here, our expectation is then that price is seeking liquidity lower, but it never took it out. But remember what I said up there. Sometimes price will generate its own liquidity, which it did here, creating this swing low. Price moved into here, took liquidity below this, yeah? Then you're saying, okay, well, now we've taken liquidity here. We're looking for price to step into here and reject. When we fail to do that, just clear this up quickly. When we fail to do this bearish gap initially offers a rejection. We got 2 weeks of, downward favoring bias here, of short bias that would have worked out well when you look at those 2 weeks starting 2nd of October 23 and the 9th 23, until we did this. And we had this strong close above here. This then becomes an inversion gap. And what do? We then target the next liquidity. There's a very small swing high here that we would target. But the key one is this, when we're looking at clear and obvious. And look at the difference between how price reacted at this low. Look at the long downside wick, comes back up, shows bullish momentum, versus this. Very small rejection here, but look at the body on the candle. It's huge. And then this expansion here told you everything you needed to know. The volume of the trading is in the body. The wicks are where price tried to get to, all right? Hey, Peter, how you doing, mate? Great to see you there. So once we got this displacement over, you're then looking for price to move higher. What are you then doing? You're then just following the same premise that price takes liquidity from highs. Where does it then look for support? Well, in the inefficiencies, which are the gaps, right? So while we're delivering bullish gaps, what do? We react in a bullish nature at bullish gaps, the same as we did here. Now, how does that all play in? Well, quite simply, we now inverted this gap, right? Now, the key liquidity on this time frame is sat above this swing high. We need to remember those equal highs are on a daily scale, which we'll look at next. So we've inverted this gap. So what's my expectation? I'm a very simple creature. So my expectation is for price, it doesn't have to come all the way down into this, by the way, but price can come back down towards this inversion. And then I think we look to move higher. So what does this spell on the daily? Well, the daily, we just overlay the same principles. Once again, look at the importance of the inversion gaps, right? Just think of it like support resistance flips, right? It's like just the normal stuff that you've been told in your everyday typical trading manuals, right? Which is that areas of resistance that then become support. Let's look at this as an example. This line here, if we just get rid of this quickly on the daily, you can draw a support resistance level across here beautifully, right? Just with what's on the screen, right? So if you were to look at that and say, okay, let's just make that orange, for example, right? So why is that significant? Well, resistance, strong close above, retested as support. Support, still support, closed below here or closed below here, retested as resistance and sold off. What are we now doing? Strong close above, we've now retested this area as support, right? So if we then go back and say, all right, well, that's our weekly level here, we can see how price can come back towards that and then start to attack this liquidity. We have relative equal highs over here, right, which we can see with this high here and this high. And then we can see above here, we have this high, which is our high time frame swing point. Hey, Hans, my man, how are you doing? Very dear friend of the channel, all the way from South Africa, one of my favorite places. So what are we looking for here? Well, look, if we keep it just as simple, we say to ourselves on a daily scale, we've got this bullish gap sat here, right? If this is our weekly plan, the price draws back to this and moves higher, then we say, okay, well, how does the weekly overlay that? Well, we've got this bullish gap here on the weekly. We dipped into it a little bit here, so I'd happily could expect continuation from here, and I'll show you how I would look for that as well. So I think we see one of two things, one of three things, actually. This, right? Point one, price comes down, repricing in here. We then look for our low time frame fractal buy patterns, and then we trade it to the highs. We know where we're wrong, yeah, because of the low that we switched, the low that we set there provides, our point of invalidation, tells us that we're wrong below that. So we know what our risk is, know where our stop is, know what our target is. Perfect. Three key factors, okay, that we need to adhere to. Or the second of the three things we could do is we'll look at this on the lower time frame, but we might not, right? We might not come all the way down for that. All right. Meaning that we don't have to come back into here, because look, price already dipped into this. If we do come back for it, I want to see price take this low. Yeah. Because like I said, that's a low within a fair value gap. That's a great liquidity pool. Also, step into the mindset of the average cryptocurrency trader or any trader, especially people new to this market. Loads of people willing to throw their money at this without really fully understanding the concepts, right? Even people that do understand them lose all the time. It's the nature of trading. Warren Buffett himself said it. There's another idiot, I think he said, born every minute, just meaning that there's people that are really willing to throw money at these markets without a general understanding. So what you will get is high up in these moves. Typically, the market is late. The average market user is late to these moves. And that means that people have started to go long up here, right? Where's the closest swing low? Well, there. Where's our target? Up here, maybe up here. So where's max pain for people in this? If you're over leveraged and you've got people aping in with lots and lots of leverage here, well, fine. The market might go here. And how often do you hear this statement? Do you know what? I knew the market was going there, but I just had my stop loss taken out before it did. Because the smartest players in the market, and sometimes obviously some of the most vindictive, that is the nature of it, all is fair in love and war, as they say. They should have really said in finance. Because if you get swept out there and gone up and your leverage position gets taken out, just creating more fuel for people to fill more bids to go higher. Okay, so we could see that move lower, or price might just react here. The other thing that we could see is price close below this. Yeah. Now, if that happens, my expectation is for price to first of all seek out liquidity below this low, which is at 63,264, I believe, 63,264 here on Femex, and then possibly down into this lower gap. Now, some of you might be thinking, well, hang on, BC, we've got this big F-off weekly inversion that you're talking about, right? So is that not significant? It is, but on a weekly scale, meaning that price can do this on a daily scale all week and recover that. And when you look at that on a weekly scale, that's just a wick below and this whole area is held. That's why time frame bias is so very important, understanding what our high time frame tells us. So what does the weekly tell us, right? Let's get rid of all of this again quickly, right? Look, what's the weekly tell us here? The weekly quite simply tells us that we're delivering, that we've closed above this, which is our weekly inversion. We expect this area to act as support, right? So what does the daily tell us? Daily tells us that we're reacting from this bullish gap here. So there's one of three plays that we can make. If we zoom into this area here on the lower time frames, we need to find a reason, conviction, and a trigger for us to go long from here, right? We know what our high time frame target is. Should we correct back down to this gap, then I want to see this low taken out because that's where the liquidity is resting. Then we'd see our recovery pattern here and trade it long. If we close below this gap, we target liquidity lower here and then down in these lower gaps. If we break structure, then we flip our high time frame bias to bearish. All right. So we now move to our to our 4 hour, and we say, okay, well, what does that look like on a 4 hour scale? What conviction do we have here using the same principles? Well, quite simply, we can see here that this very skinny bullish gap has been closed beneath, making an inversion. So we're now expecting that area to act as resistance, right? So as long as we're down here, this long downside wick here, which I imagine would have been a news fueled wick, or a data wick, becomes a really key liquidity target. So I'd actually intraday be favoring shorts down to this, right? Unless we recover this. Remember, same principles again, just overlaid. We're looking at the key kind of elements here in a kind of advanced way of looking at support and resistance. So close back above this, target the immediate swing higher and then higher. As long as we're below it, then price is probably going to seek liquidity lower before making a recovery. That's just as simple as that time frame gets, right? The next resting liquidity lower is this low, which is within this gap and is also a high time frame swing low, right? That's where the liquidity is resting, in my opinion. Now, price might not head down for this. Price can just come and close back above this, in which case I'm then saying, well, quite simply, that is not valid. It is not valid anymore because it should now. That was bullish, should have been support, wasn't support. If it's then violated, it should then become resistance, And if it's not going to be resistance and it's back above, then it's invalid and we look for price to move higher. We also need to consider that in exactly 38 minutes, just over, that this, as long as price action doesn't close above it or fill this gap, this will then be a bearish gap. When we're within a bearish gap, we promote bearish trades, or we favor bearish trades, being shorts. Close above this, and then I think we can really, really start to rip. But that's not confirmed until we close, all right? Which is 30, what have we got on the clock at the moment? 22, so we got 37 minutes, 38 seconds, all right? Just checking there wasn't any latency there that I was going to pass on to you from the stream. So now, and I don't normally go this low onto the time frames, all right? So what I'm looking at now is saying, okay, well, where's our kind of key liquidity pools here? And, what is price now doing on the 15-minute? Because if we need to see price back above this on the 4-hour scale, and we're saying to ourselves, well, in which case we're then favoring short trades from here, what would we need to see? Well, same kind of thing, really. We want to look at this and say, where's price delivering from? You see price is holding this nice 15-minute gap here. So while we're in here, this is where you would kind of go in and you would look for those kind of fractal patterns, all right? Now, I personally like to trade within traditional market hours and sessions. So favoring the New York session for me, it's when the largest amount of volume and volatility steps into the market. But quite simply, what we've got now is a trading plan that we can look at and say, okay, well, while we're kind of held below this on the 4-hour scale, shorts are being favored. We've got this here, however, on the 15-minute scale, which would give us our very first indication, so of strength. Because if we violate this, look how it's coming: resistance, 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 right? What's happened now? Well, you could see a sweep below here, or maybe even a bit lower, but whatever, some form of inducement. If price gets back above this, violating this, then all of a sudden we're saying, okay, well, we can trade this margin here. As price draws back to try and make it. The early signs of strength here are what are going to play into our high time frame strength, but we have to be respectful of that high time frame bias. So that's my line in the sand here. I want to see this inverted, right? And then with this being inverted, this flip to support, and then we start to kind of push higher. Whilst we remain below this, then we have our higher time frame draw down here, and we also have our lower time frame draw here as well. So that's what I would be doing. And while we remain below this, expectations for price to come and take liquidity. We've got lots resting below this swing low, this swing low, this swing low, and this swing low, which is also a higher time frame swing low. So quite simply, that is how I would outline that. Okay. So actually, we've got a few minutes. I just really wanted to kind of keep it that simple, really, guys. Just to show you lots of questions for people say like, okay, that's fine, but how did you deduce that? How did you kind of step in and say, okay, well, I'm looking for shorts today, or I'm looking for longs today? And also, why people will say to me, why are you bullish on a higher time frame yet intraday taking short setups? Well, quite simply because as long as I've got conviction in where the targets are, then I'm happy to enter the trades. It's just, if on a day like today, we've got a higher time frame bullish bias, right? Then quite simply, well, when we realign with that bias, so when the lower time frames are telling us that we're stepping bullish again, then I'll jump in on those longs and I'll jump in with full conviction. while the lower time frames are telling us and giving us a bearish bias, well, then I either want to stay off the charts in terms of not enter any positions until I get a long setup, yeah, or I'm willing to intraday trade this and scalp for liquidity, waiting for that long setup potential to come back in, and then kind of getting into my long positions. All right. So that's just the way that I'm looking at it. Really interesting one from our friend Hans here as well. Yeah, you definitely see how you could see that as a cup and handle pattern on the 15-minute. So that is very, very interesting, right? Because when you look at that, that could be, I'm not a pattern trader. What I would say is that for anybody that is interested, I'm not your go-to for that, right? I understand the patterns. I trained the patterns many years ago, as did all, I imagine, traditional market traders. But I would be saying going to someone like Axel Kaibar, for example, who, CMT had the pleasure of interviewing at one of our free Congress events, and was just, his knowledge is exceptional, and his data that he's got behind it as well on those patterns and their success rate. But you could absolutely see that as a cup and handle. So I think that's really, really interesting. And you know what? We've got a few minutes left at the end of the show here. Let's have a very quick look at Flux, shall we, as well? Let me just... And Simon wanted us to look at ETH as well. Do you say ETH Fi? Was that, Simon? I'm just not degen enough for this, am I? Oh, so what, you wanted to look at the market cap? Yeah, again, I'm not going to lie to you, man. This isn't really my area, especially by any means. But I tell you who is. Jay, Trading Tank, is unbelievable at that. You can see the steady progression you've got up on this. So your crypto cap here on ETHFi, we're not trading this as a tradable chart. If that's what you meant, by the way, Simon, do let me know if it's not, mate. But yeah, Axel is absolutely brilliant, mate. He really, really is. So anyway, just before we finish up here, guys, because we've got another couple of minutes, I will just take a look at Flux here as well. Let's take a look at it on Binance for our friend Peter. And let's kind of bring those concepts together, shall we? All right. So first of all, we're going to look here at the weekly. Well, quite simply here on the weekly, you can see all this. We'll take a look at that in a minute, actually, on the daily. But again, look, expecting reactions at these levels, yeah? So price came up strong close above this. So our expectation was for higher, right? Price then came back down and closed back below this level. As my friend Trader Dank would say, if Johnny's left the house and he's left for good and for a good reason, then why is Johnny back in your house? Yeah, if Johnny's leaving to go somewhere else and he slipped back in the back door, he's probably there for no good reason, right? So then we're looking at the other end of the argument. Very, very good concept, and one that he tells a lot better than I do. But let me just hide all that stuff for a moment. We can turn all that back on in a minute. Just want to kind of take a look at this in the form of naked price action. So Flux here on a weekly scale is drawing back towards this bearish gap, all right? Why is it doing that? Well, quite simply, I think we would see that price has taken some form of liquidity here, which it has. Maybe, actually, let's take a look. That low is set at 48,400, 412. And that low set at 48.77. Okay, fine. So we've got a very, very marginal sweep, as you can see there, but enough to form a bullish reaction. Now, again, look, we've taken liquidity from the lows. The buyers have stepped in because we haven't been able to displace below the low. Now our expectation is that price is coming to reprice here. And until we close above it, we would still look for this to then be favoring a move lower. So we then move to our daily and say, okay, well, what does the daily tell us? Well, the daily's given us this nice kind of bullish indication here. And once again, broken record time, but all started by an inversion gap, right? Price came and took external liquidity, repriced here, showed strength coming back within it, closed above it. When it closes above it, we invert the gap. And then our expectation is that price is coming to seek liquidity higher up, here, here, and here. Now, what we need to be cautious of here is remembering that we're drawing back into a higher time frame bearish array. Yeah. So in terms of what I'm looking for on a daily scale, well, I'm a little bit cautious here. I would like to see a daily close more aggressive than this one. Yeah. That kind of daily candle there. Yes, it was a weekend, right? But you've got that small wick there, and then price still hasn't really managed to show that momentum above it. The other area that I would look at here is probably this in terms of being an order block. Yeah, you got another kind of fairly insignificant down close doji candle here, but well, up close actually, but bearish candle. But I would look at this as the kind of key order block candle here and say, well, this is the area you want to see hold, really. It hasn't really been retested. We got a close above it here, which told us that we'd get continuation to this high, or suggested that we would. But that's where we kind of really need to move to a more granular timeline here, right? Because the 4 hour should really hopefully give us, as it does here, right? So if we look at the 4 hour here, quite simply, we got this big, beautiful bullish gap. So while we're looking at this, there's an expectation for this to hold. We're delivering in a bullish state until we close back below this, in which case I would then be looking to target this low. I think we see continuation to at least this high, but actually I do think that the battleground here is much more on the higher time frames, like the daily, where we really want to kind of see price show us some conviction, right? So either a strong body close above this, we could see something, for example, where price comes and, you know, wicks above this and then comes back down. I think if we start closing back below this line at 0.714566, then I think we could be looking at a correction down targeting the top of this order block, which is at 0.670911. All right, guys. So look, we're going to cut the stream there, I think, today. Hopefully that's kind of giving a little bit of insight, a lot of questions in terms of how I kind of look at these reads and kind of get this high time frame bias and decant it down. So hopefully that was useful for you guys in terms of stepping into my mindset on this. Obviously, the key with anything is having a strategy that, first of all, you understand that you have a lot of data for, that you've back tested a lot, that you've then forward tested as well, and that you just understand that you've got that belief and that understanding of that system that you can then execute, you know, without asking too many questions. You want that kind of binary approach on that. Always thanks to Johnny, and do make sure to check out Dang's video on that. It's just, I'll dig it out and share it on Twitter. It's brilliant. But a huge thanks to everybody for joining the live stream today. We always get a few thousand people on here, so we really, really appreciate every single one of you. Please do remember as well, the week ahead in terms of news, there is some red folder news this week, so please do be aware of that. In fact, let's take a very quick look together. So this is red folder news events that affect, you know, the US market is our kind of focus here. All right, so we can see as we step into here, we've got a bit of a barren start to the week. And then we've got Monday 22nd, Tuesday 23rd, no news days, which is a bit of an interesting one, really. Okay, so, you know, volatility could be a little bit low there. We've obviously got a lot of news in terms of like fundamental drivers. These are more looking at, for example, the key with the US market. We have flash manufacturing PMI at 2:45 p.m. my time, 1:45 UTC, which is on Wednesday. All right, and we have flash servicing PMI there as well. Thursday is the real kind of look here as we see the advanced GDP quarter on quarter here for the US, but massively the unemployment claims. We have seen some really big moves in the market off the back of that. And Friday as well. Close of the week then. So obviously, you know, you've also got people closing out positions, taking profits, etc. But we have core PCE price index month on month and revised UOM consumer sentiment as well, which is slightly later, about an hour and a half afterwards. All right. Now, the reason to be aware of these is they do have an effect on traditional markets. All right. So just to switch you back very, very quickly so that we can take a look at the NASDAQ here. So looking at our equity markets, looking at the DXY, we can see today that the DXY is down. All right, we can see that minus 0.10%. These are our kind of range levels. We expected a bit of a reaction here down at our range low, 103.898. This midline here is then the next key area of interest for us at 105.500. Really, you know, for a good environment for risk, you typically see a weak dollar index, right? So while there's strength in the dollar index, that normally translates into a little bit of weakness for risk. So there's no surprise to see the dollar index pulling down today while we see a really nicely resurgent NQ. You have to forgive all the stuff on the chart. This is one of our live trading charts, all right? But you can also check out something like the NQ1 contract. And quite simply for me here, you know, we were looking at this area, we've come down, we've now swept this within a gap, within a higher time frame gap, key liquidity pool. This was our kind of line in the sand here. We closed back above it, tested it as support, set a failure swing and closed back below it. That was our indication of why we were short bias, trading the NASDAQ down. All right, and that was obviously on Thursday and Friday. We've taken key liquidity here and we're now back above that level. So we could be looking for a bit of a bounce, which has obviously been helped by the fuel of a weakening dollar index as well. So whether you take those things into account or not can always be a good idea to look at that. But let's see what the news gives us. Let's see what's kind of playing out today. And we should have a pretty clear run at this. Maybe volatility volume might be a little bit low until Wednesday, but do keep an eye on that Wednesday, Thursday with that red folder news. All right, guys, have a fantastic week ahead. If you're interested in coming over and trading with the team and I over at the Bird Nest, you can find all the information in the description below, how you can join us for free, how you can get access to all the webinars, etc., as well as any paid plans or mentorship you might be after, and our exchange partners if you're interested in trading with Binance, Prime XBT, Bybit. Okay, you can find the links in the description down there as well. All right, so big shout out to all of you guys. Thank you very much for the comments. Always appreciate your support. Let's get after it this week. Please do stay in touch. Reach out on Twitter. You can find me at BC_Richfield. And for those of you that are members over at TBM with you, we'll see you tomorrow for our live trading sessions. All right, guys, I'll be back again on Wednesday, a slightly earlier time this week of 10 o'clock UTC. And I look forward to seeing you all then for our Alt Request Wednesday. Have a fantastic